In their latest monthly outlook for the S&P, RBC Capital Markets is maintaining their recommendations for the month, keeping overweights between cyclicals and defensives, saying it's not entirely clear to us whether we're at a turning point or on the cusp of pulling out a growth scare in the range that the stock market's been trapped in the past 2 years, or the tipping point where the growth scare morphs into economic contraction. We're keeping our overweights balanced. Joining me now is the woman behind the note, Lori Calvasina, RBC Capital Markets head of U.S. equity strategy. When do you know if it's a turning or tipping point?
I think that there will be a point where you just have to simply hold your nose and buy all the cyclicals and hold your nose and sell all of the defensives. And I think that's, from a bottom-up perspective, what we typically tend to see. Other than that, I think the confirmation tends to come after the market has already inflected one way or the other.
Well, one really interesting thing for me, Laurie, in the note this morning was that a lot of companies that have reported are being asked about their 2020 guidance and saying we can't do it. We can't talk about 2020 because there's so much uncertainty. What does that tell us about just where we are in the cycle?
Well, I think it tells us exactly what we were trying to say in the note, where we know that there are some clear and present pressures on the market, but it's not exactly clear whether or not the market is going to actually break as opposed to simply bend. So far, it's been bending. And I think you're right to pick up on that point. As we were going through the transcripts last week, we just found that this question was coming up time and time again. The sell-side analysts were really pushing it in terms of what do you think for 2020? And the companies were all coming back and saying, we don't know. We don't have that visibility. We've got to get into 4Q. And 4Q, we think we've got under control.
Well, and this goes to your world, too. Like, if you don't know what your earnings are going to be, like, how do you buy stuff?
Well, exactly. It's
like
very tricky, but
it's base level.
It's a reasonable question. What are you looking at in 2020? I mean, I ask M&A bankers all the time, what are you expecting going into 2020? And they say the same thing. With all of the geopolitical risk, with all of the macro uncertainty, it's just really hard to predict. But that's funny because it's only, what, 2 months and just over 2 months away?
Yeah, exactly.
And what I also think is funny is, you know, myself included, and I'm guilty of this, but all of us on the sell side are are in strategy land at least, are looking around at these sell side analysts who do the bottom up estimates, and we're saying, guys, you need to cut your numbers. You've still got 10% growth baked in. I'm modeling 5%, and even my number, I can see how you can poke some holes in. And then you go through these transcripts, and you have a lot of sympathy for these analysts because they're just not getting that color and that direction that they need to go in and make those big adjustments for next year.